Okay, as promised, let's straight away go across to Mr. Madan to understand exactly the nature of this transaction with the Japanese company Kubota. Mr. Madan, thanks so much for taking this call, sir. Can you explain how much stake they have bought? And I believe the price is 850 rupees.
Yeah, so price is 850 rupees. This is a preferential issue of shares which will happen to Kubota Corporation, Japan. And they will acquire 10% stake in the company on a post-capital reduction basis.
Okay, so sir, can you give us a sense of the rationale?
Yeah, so like I think Kubota has been our partner in one of the JV. So we have set up a joint manufacturing capacity in a company called Escorts India Limited, which is a 60/40 JV with Escorts Ltd and Kubota Corporation. And the JV is for manufacturing 50,000 tractors annually in India. So this collaboration really will strengthen the relationship between the two partners. So they have gone ahead and decided to take 10% equity into our company in Escorts Limited. Simultaneous to this, we are also going to take 40% stake in the sales company in India, which is a separate company than the manufacturing JV. So that sales company will also be a 60/40 JV with Kubota Corporation now.
So you are also forming a sales joint venture now with Kubota, a 60/40. So is there a chance that they increase the stake?
Well,
yes, sir, please continue.
Only 10% stake. As of now, it's only 10% stake. So that's what we are starting the relationship with. And like I said, since we already have a JV with them in the manufacturing space, which is a 60/40 JV, and with the sales JV also, which will again be a 60/40 JV, and the overall relationship with the company will be very strong. And we intend to expand into the areas of making premium tractors in the Indian market. We want to expand to the implement space. We're looking at some construction equipment segment also for expansion. We also plan to set up a R&D center, joint R&D center in India. So the partnership will be pretty large.
Okay, so basically the old joint venture continues. You'll also set up a sales joint venture, and then there is the overall 10% equity infusion that's coming in because of the preference share issue. Sir, after the transaction is done, what will be the promoters holding in the company?
So since we're issuing the preferential shares to Kubota Corporation, so there's also a proposal the board has approved in principle to cancel the shares which are held by our treasury shares, which are the trust shares actually. So that cancellation will happen once the preferential share allotment is completed. So which will be, say, in the 4 to 5 months time frame. So after the capital reduction of those trust shares, so we'll be back to the same level of capital what we have today. So there will not be any expansion in the capital base. The promoter holding which today stands, including the trust share, as about 40%, which will come down to roughly 30%.
Okay, so sir, if you could just repeat that point, the line was a little scratchy. You're saying after the treasury shares are extinguished, promoter shareholding will come down to about 30%, if I heard you right. So if you could just clarify that.
Yeah, so right now the treasury shares which we have, including the promoter's holding, the combined holding is about 40.25%, which after the cancellation of this 10% will come down to 30.25%.
Okay, so that will raise obvious questions. So you would have already guessed my follow-up. The market would want to know what the promoter's thought process is and whether they will look to increase their shareholding back, because it's a substantial drop from 40% to 30%.
No, so as you know, the shares held by the trust are being cancelled. It's not the share of the promoter which are getting sold. So it's a primary issue which is happening. So money is going to flow back to the company only. So ultimately, it's the beneficiary of those trust shares is the company itself. So the entire money of 1,041 crores, which is going to come, will come into Escorts Limited only.
Yes, sir. No doubt about that. No taking away from that point. But I'm just trying to understand, once the transaction is done and we see the new equity base, whether promoters would look to increase their shareholding at least any time in the immediate future.
So, like I said, Kubota is a strategic partner for Escorts. Obviously, our combined holdings still remains at the same level. So we don't see really a need for promoters to increase their shareholding in the short to medium term.
Okay. Sir, what would the immediate synergies be if we just talk about business operations? By when, first of all, do you think will the transactions be done? By when will the sales JV be up and running? And what are the immediate synergies that one can look out for?
So I think the transaction will be subject to all the regulatory approvals and the shareholders' approval. So we expect the shareholders' meeting will be held sometime towards the end of April. And after that, we will need to get regulatory approvals, which should take maybe another month or month and a half. So we hope by end of June, tentatively, I think we should be able to close the transaction. And on the sales JV fund, they already have a sales company in India, into which will be buying in 40%. And that transaction will also happen simultaneously with the Greenfusion in this company, in Escorts. So that also you can expect may happen somewhere around June, July sort of time period.
Okay. So before we let you go, we live in very, very uncertain times. So let me ask you about this. The corona impact on business, what is it that you're seeing, on your lines, components, etc.? And also, given this uncertain environment, this fund infusion that's coming in because of this Japanese investor, the Japanese company, how are there any plans in place as of now on the fund deployment?
So, like I mentioned, I think the relationship, the idea of the relationship is to grow it further, and I think also expand into the areas of manufacturing implements, going to the some part of the construction equipment business to set up the joint R&D in India. So most of the, I think, for money which will get spent will be on the product development side, will be the new products will get introduced in India and also for the global market. So there's a plan, obviously, between both the companies how this fund will get utilized over the next 4 to 5 years period. And that investment definitely we expect to pay rich dividend to all the shareholders.
Okay, all right. So we'll leave it on that note for today. Perhaps we'll try and connect with you again to understand more about the immediate business considering this massive disruption that's underway. But we'll leave that for another time. Thank you very much for explaining the transaction and the rationale to us. That's Escorts. So the Japanese company with which they already had a joint venture comes in as a strategic partner. 10% equity is how much they will hold once the transaction is complete. The interesting aspect is the promoters' shareholding goes down because treasury stock is going to be extinguished. The promoter shareholding will go down from 40% to about 30%. We need to take a very quick break. Back with more in just a moment.